Let's look at the advantages of investing in certificate of deposits. How you can grow your savings safely. Number one is security and safety of deposits. It inculcates safety and security. I see these are low risk investment actually, especially when they are issued by an FDIC insured banks. So in the US, the FDIC insures deposits up to $250,000 per deposit per bank, making CDs one of the safest investment options for conservative investors. The very fact that your money is secured, it is insured by this government body. That safety is something that is worth considering. It's kind of comforting. Number two is predictable returns. There is predictable returns. With a fixed interest rate, CDs offer predictable returns over the time of the deposits, allowing investors to know exactly how much they will earn by the maturity date. So your returns, the returns are fixed and are equally predictable. So you know precisely what you're getting, at any given point in time. There's no, uncertainty about the returns. Number three is there's no market risk. No market risk. So unlike stocks, equities, or bonds, the value of CD does not, it doesn't fluctuate. There's no sentiment attached to investing in CDs, and so there's no market fluctuation. It doesn't fluctuate. It remains stable, steady. And so once the interest rate is set, the returns are guaranteed unless the investor withdraws early, which of course will attract penalties. It will incur penalties. So the return is predictable. You know precisely what you will get at the end of the day. That's assuming you hold it to maturity. But if you don't, it will certainly attract penalties. You may lose some part of the interest or some months of interest that would have accrued to you. Number four is high interest rates than savings accounts. There's that. When you compare it to the traditional savings account, the interest rate is quite high actually. It's high, and CD generally offer higher interest rates than traditional savings accounts uh, or money market accounts, making them a more attractive options for any interest on savings without uh, significant risk. You get what you could more than what you could obtain in the typical savings accounts, and the risk is really minimal. Number five is FDIC insurance. It covers this particular. It covers the banks issuing these instruments. For CDs issued by FDIC insured institutions, the principal and the interest are protected by up to $250,000 per depositor per bank, making them a secure place to store your money. Your money is secure, even in the case where there's bank distress, you can still get your money up to the tune of $250,000. Number six is variety of time. CD comes in a wide range of maturities, from as short as a month to as long as several years, actually, allowing investors to select the time that best matches their financial goal and timeline. So you select the time that you are more comfortable with, the kind of terms that you will not default, you will not rush to go and withdraw your money and incur penalties at the end of the day. So there's that variety of terms. Please like this video and subscribe to this channel. It will do me a tons of good. Number 7 is flexibility in interest payments. Some see this allow interest payment to be made periodically. It might be monthly, quarterly, or annually, or at maturity. This flexibility in benefits, it benefits those who need regular income and who want to reinvest the interest. You could reinvest the interest and allow it to compound. So your interest plus your capital will compound over time. Then number 8 is a low minimum investment. Low minimum investment. So in this case, you discover that most cities have a low investment requirements, which ranges from between $500 to $1,000, making them accessible to a wide range of investors. Individuals could then invest. Even those who are not classified as high net worth individual can equally invest in these instruments. Number 9 is fixed interest rate. Fixed interest rate. The interest rate on a CD is typically fixed for the entire time, which protects the investors from fluctuating, market rate, especially, in low interest rate environment. So your interest is fixed; it doesn't fluctuate. You know what you are getting, nothing more and nothing less. It gives you comfort because you know precisely that come what may, whether the environment tanks, whether the economy tanks or grows, whichever one may be the case, your interest rate is what is there. It doesn't fluctuate, it doesn't alter, it's not alterable. Number 10 is simple and easy to understand. Simple and easy to understand. See, they are straightforward and easy for everybody. You don't need to be very, very, sophisticated. Everybody who have the capital can invest in CDs. They are not really complicated structure and there are no hidden fees attached. Investors know exactly how much they are depositing and they know how much they will get as interest, how much they will earn, and they equally know that at the end of at maturity they will then regain their their principal back. Number 10 is number 11 rather is compound interest. Some CDs compound the interest, meaning that the interest earned is added to the principal, and both combinations will be left to compound, allowing investors to earn interest on their interest, which can enhance their returns over time. Number 12 is no management fee. Number 12, there's no management fee. And so unlike some other investment vehicles, these generally do not have a management fees or commission. There's no hidden fee, which can eat into returns. Very, very simple and straightforward. This is the deposit. These are the interest, and you collect the amount you are deposit, at face value at maturity without any kind of hidden fees. And so these advantages make CDs suitable. It's a suitable choice for conservative investors seeking a secure, low-risk way to earn returns on their savings, especially when they do not, need the money immediately. They don't need the fund immediately. You can go into this particular kind of investment. It's a very good alternative to those risky investments in the stock market if you cannot really bear the risk.